Do you know why the entire world continues to support the United States? Why the people outside of America, often more afraid of a dollar collapse than the Americans themselves? It is because global business and the wealth we hold in our hands is denominated in US dollars. Think back to the 2008 financial crisis. Although it began in the US, it crashed the global economy. Yet the US recovered in less than a year. Why? Because they can print US dollar, and the rest of countries cannot. As a result, the world often chooses to turn a blind eye. We watch them recklessly devalue the dollar and dilute the value of US debt. Watch them harvest the world's wealth by printing cash. We accept this because the alternative, seeing the US go bankrupt, is too terrifying to contemplate. Now here's the critical question. Experts and media outlets everywhere have told you that the US government's primary goal is to force the Federal Reserve to lower interest rates. Why? Because interest payments on the US national debt now exceed the entire military budget. If rates come down, that money could theoretically fund a whole new army. That logic seems sound? But here's the problem. The Federal Reserve has lowered interest rates recently. But have you looked at the yields on US Treasury bonds? Have they gone down? No, they seem stuck, and in some cases, they are actually rising. The truth is terrifying. Even after the Fed cut rates, US interest payments actually increased. Inflation remains sticky, and the job market looks shaky. What does this signal? Then, another mystery arises. Recently, the Chinese government conducted a quiet but massive experiment. Hello everyone, welcome to Stewardship Finance Academy. The Chinese government recently issued $4 billion in sovereign bonds. Yes, you heard that right. China is borrowing US dollars from the world. Now, compare that to Warren Buffett, who sits on nearly $400 billion in cash. China is only borrowing $4 billion. Does that mean China's economy is failing? Are they broke and borrowing just to survive? Think about it. If a wealthy person borrows money for lunch, is it because they are bankrupt? Or did they just leave their wallet at home? China holds $3.2 trillion in foreign exchange reserves and over $700 billion in US Treasury bonds. If they needed cash, they could simply sell some American debt and have the money instantly. Clearly, China isn't borrowing $4 billion out of desperation. This tells us that countries don't always borrow because they are short on cash. After all, with the US owing $38 trillion, wouldn't you say the US is the one desperate for money? Why are US Treasury bonds considered risk-free assets? Because the US government borrows in US dollars. If they can't pay you back, the Federal Reserve simply prints more dollars to cover the debt. Theoretically, you never have to worry about a default. That is why US Treasuries have always held the highest credit ratings. China is different. China can only print renminbi RMB, not US dollars. If China borrows dollars and can't pay you back, they can't just print their way out of it. Because of this, the credit rating for Chinese dollar bonds is technically 3 notches lower than US bonds. So, if you had $4 billion to lend, who would you give it to? Logically, you would lend it to the US. It's safer. But here's the shock. That $4 billion bond issuance from China was snapped up. Investors went crazy for it. Over $120 billion in bids poured in. And here's the key point. The interest rate China had to pay was almost identical to the rate paid by the US government. What does this mean? It means the market is voted with its wallet. Investors ignored the credit ratings. They have started to view Chinese bonds as a safe haven, comparable to US bonds. If China didn't need the money, what was this?
Ow.
It was a trial balloon launched in the Hong Kong market. What were they testing? They proved that while they only asked for $4 billion, there was $120 billion in capital, ready and waiting to lend to them. The US borrows about $500 billion every quarter. In this single experiment, China proved it could potentially siphon off a massive chunk of the customers, who usually buy US debt. Capital in the market is limited. It either goes to the US or it goes to China. For the last 2 years, US Treasury bonds have been in a bear market. Prices are falling because there are more sellers than buyers. Right at this moment, China proved it can attract at least $120 billion away from the US. If China had decided to borrow the full $120 billion, that would be $120 billion less available to buy US debt. Wouldn't that force US bond prices down even further? Wouldn't the US government have to offer even higher interest rates to attract lenders? And wouldn't that make the US deficit even worse? Essentially, China has demonstrated the ability to put immense pressure on the US Treasury market. This proves that the cycle of the US dollar has been broken. For decades, the system worked like this. The US prints money to buy goods from the world. Diamonds from South Africa, clothes from Vietnam, and to get that money back, the US issues Treasury bonds. The world lends the dollars back to the US, and the US spends them again. It is a cycle of printing, spending, and borrowing back. But now, that money isn't automatically flowing back to the US. It might be flowing to China instead. If the US can't borrow that money back, they will have to print new money for their own consumption. That leads directly to currency devaluation. Now, look deeper. Is China really just borrowing money? We know China has been the largest holder of US debt for the last 20 years. Recently, data shows China reducing its holdings. Many analysts say China is selling, but if they sell too fast, they crash the price and lose money. It would be like selling a house for half price just to get out. So, what is the strategy? It's called debt transfer. China holds long-term US debt, say 30-year bonds. They don't want to wait 30 years to get paid because by then, inflation might make those dollars worthless. But they also don't want to sell at a huge loss today. So, China borrows dollars from the world. China becomes the debtor to the world, but holds the US as its debtor. They get cash now from the bond issuance, effectively unlocking the value of the money they lent to the US without crashing the market by selling the US bonds. In 30 years, the US pays China, China pays the world. China has effectively transferred the US risk to the rest of the world while securing liquidity today. While these financial giants, nations, and central banks battle it out, we need to think about our own wallets. How do we survive this wealth transfer? Whether it is US stocks, bonds, Bitcoin, or gold, prices aren't driven by news headlines. They're driven by one thing: supply and demand. Are there more buyers or more sellers? All the moves by major players leave footprints on the charts. We don't need to understand every international conspiracy. We just need to spot the footprints. While the world argues about who is right or wrong, we need clear entry and exit signals. If you are afraid you might forget these critical details, don't let this knowledge go to waste. Like this video right now, and it will automatically be added to your playlist so you can come back and follow along anytime. Now, about surviving this shift. We spent 3 months condensing a complete stock investing system into a masterclass. You don't need a finance degree. Even if you are a complete beginner, you can learn how to consistently lose less and win more, completely escaping the cycle of panic, selling, and greed. Today, if you are truly serious about surviving in this market, I am giving you a free pass. Consider it a charity class for my community. Those who missed out last time, do not miss out this time. Click the first link in the description immediately to secure your free spot. Don't wait until a crisis hits and you are trapped before remembering this opportunity was available. Let's look at the data. The US government is paying more in interest than on its military. Yet the Fed cut rates, yet the 10-year Treasury yield is still stuck around 4%. Why? It's supply and demand. Imagine you have $1 million to buy 10 paintings. The price is high. Now imagine you have $1 million to buy 100 paintings. The price per painting drops. In 2020, during the pandemic, the Federal Reserve printed massive amounts of money, increasing the cash supply, while the government didn't issue many new bonds, stable goods supply. The result? Bond prices went up, and rates went to zero. Today, in 2025, it is the opposite. The US government has added trillions in new debt, more paintings, but the Federal Reserve is shrinking its balance sheet, less cash. More bonds plus less cash equals lower prices and higher interest rates. This is the impossible triangle. The US government must spend to keep running deficit spending. They must borrow to cover the spending. But if they print money to lower the interest rates, inflation explodes and destroys the dollar. The Fed chairman, Jerome Powell, and the President Donald Trump are facing a dilemma they cannot solve. They are choosing to shrink the balance sheet to save the dollar from hyperinflation, but that leaves US bonds with no buyers. This brings us to a controversial theory. Since the world is hesitant to lend to the US directly, perhaps China is acting as a middleman. China borrows from the world via these new bonds and provides dollar liquidity to the system. China earns trillions from trade, yet their reserves stay steady. Where is the money going? China has been lending dollars to other nations that are short on cash, preventing them from bankruptcy. China is effectively acting as a central bank for the developing world. The message is clear. If you need dollars, you don't have to go to the US anymore. You can go to China. This is the real currency war. It is not about replacing the dollar with the yen or the euro. It is about who controls the dollar system. Who is the core of liquidity? If China becomes the new hub for dollar liquidity, does the Federal Reserve lose its power? Because of this shift, we see volatility in US stocks, bonds, and crypto. If you don't want to be the victim of this capital plunder, you need a strategy. The ultimate form of this war isn't about whose face is on the bill. It is about who makes the rules. If you have a different perspective, leave a comment below. Let's discuss it rationally. What do you expect for next week? We'll continue sharing insights on achieving financial freedom. Please subscribe and turn on notifications so you don't miss out. I sincerely wish financial freedom for all of you. If even one sentence today helps you protect your wealth, I am satisfied. See you next week.